My name is Tanya Kosmini, and I am with Realty One Group Elevate here in North Florida. And I am so excited to welcome you back to another episode of the Elevate with Us podcast. And you guys are in for a special treat today. I have Peachie here with me, and she is a remarkable human being. I can't wait for her to share her story and to tell you more about her business. I know you're going to learn something because every time I meet her, I learn something new about her business. So Peachie, thank you so much for coming here today. And just tell everybody kind of what you do, because I think there's a lot of unknown information or misinformation about your business.
Yes, thank you, Tanya. It's so nice to be on your show. I really appreciate it.
Absolutely. Thanks for coming.
Yes, so I own an insurance brokerage, mainly focusing on the life insurance, long-term care, disability insurance, and some annuities. So you're right. There's a lot of misconception about insurance in general.
Yeah.
And I want to be able to help the consumers and your listeners get clarity on those things.
For sure. So I don't even really know. I'm going to be really honest. I don't really understand it very well. I intend to. We've talked about getting together, and every time I have some type of disaster. But now that you're here, we're going to put that on the calendar. So you mentioned life insurance. So to me, like, old people have life insurance. So I know I have that wrong. And I think there's probably different types of life insurance. So, like, who needs life insurance? And just inform us about what that is.
Yes. So, the first common misconception about life insurance is that you have to have something in particular. I call them camps, right? People are like, I'm a term person.
Oh, that's what it is.
You got to buy term insurance. You got to
know what it means.
Or you got to buy permanent insurance, or some people call it whole life insurance.
Whole life. Okay.
Yes.
Term and whole life are the two types, products.
Generally, yes. They're term and perm, and people labeled it permanent as whole life.
Okay.
And the truth is, there's not a one-size-fits-all. It's like buying a house, right? So insurance is very specific to the buyer. You can't be like, okay, I saw this on TikTok or wherever. It says I should buy term for the rest of my life. Right, you read it on the internet. I mean, it's not like that. You need to be able to work with an insurance professional, first and foremost, an independent insurance professional who has access to all the products available, and also who is not married to any insurance company. By that, I mean true independence.
Okay.
You need, like buying a house, you need to be able to know what's available out there. And your insurance advisor needs to educate you on that so that you are matched with the product that is really what's best for you and your situation, because everybody's different.
Okay. So basically there's different types of policies. And with that, you coach people or advise them and say, hey, based on your situation, which I'm assuming has something to do with how old they are, how many kids they have, how much money they're willing to invest, you're able to say, hey, it looks like these three options kind of fit your goals or your lifestyle the best. Because I think people, I mean, like, I assumed there was one product, but there's more than one.
Oh, there's a lot.
And there's probably within term, there's probably multiple types. And within term, I'm like learning the cool words today.
Yeah.
There's different products. So what type of people should be reaching out to? I mean, I think I answered it myself in my brain that it's everybody, but who do you really need to talk to?
Yeah. So really, a lot of my clients are from all walks of life. So I have young families who are just starting out, and they really need to provide if there was premature death. You hear these stories about a young 40-year-old dying of an accident, car accident, or having a heart attack at 53.
For sure.
Right? So those young families, they generally would come to me for what we call expense or replacement of income for the breadwinner.
Wow. Okay.
So, and there you have your business owners. So insurance has it's a very good vehicle for tax advantages, for example.
Okay.
Or for transferring your business assets to a partner or to your heir. So business partners usually would use life insurance for what we call buy-sell agreements. Or if you're a business owner, you have an awesome employee you want to help and you don't want to lose. We call that a key man policy, for example,
Oh,
if
wow.
that person prematurely dies, it's hard to replace those. Awesome. I don't know. I'm sure you got those where you're just like, wow, what would
Oh,
I do
yeah.
without her,
Oh, yeah, absolutely.
So those types of clients would also come to me. And then on the other side of the spectrum are more established people or older clients. They've already done they've had a nest egg, they've had their retirement planning, they probably are having a lot of estate tax issues, especially, the estate tax arena is very,
Wow.
very politically driven as far as who's sitting in whatever, right? But at the end of the day, I joke about this, Tanya. It's like we are certain about two things in life, right? One is we're all going to die.
Yep. Death
right?
and taxes, right?
Taxes. If you're a good person, you're going to pay taxes, right?
Absolutely.
So life insurance actually is probably the only vehicle out there that is tax-free, right? So I'm not an accountant, but generally, as long as it is properly designed by your agent, by your independent agent,
Wow.
it can definitely help with those types of issues.
So clearly you're very educated on this. So how did you get here? Like, how did you become an independent agent? I'm sure you didn't start it yesterday. So can you tell us your journey as to how you got from start to finish to right now?
Yeah. So I'm a first-generation immigrant. My dad and I immigrated to this country, thank you, USA, in 1996.
Wow.
And yeah, so I was born in the Philippines, and I got lucky and I found a job working for one of the highest rated insurance company in North America. In fact, worldwide. It's a multinational, international company,
Wow.
a blue chip company. And at that time in the 90s, I was, as an immigrant, we couldn't afford college. So I had to study at night at a community college
Okay.
and work in the morning. And that's how I got that job. I was working full time. And that insurance company was so awesome to me. They gave me the tools, the education to be what we call an underwriter. So an underwriter is the person that decides whether or not you are approved or declined for insurance.
Sure.
So I got my underwriting training there. And it's funny because I was 18 by the time I got that job. My boss must have been really powerful because he would send the helicopter from Massachusetts, where the insurance company home office was, to, by that time when I was living in New Jersey, pick me up in New Jersey in the parking lot and fly me to Mass for the day training, come back by dinner.
So he would pick you up in New Jersey, fly you to Massachusetts, and you'd be home the same day?
By dinner, yes.
I've never even been in a helicopter.
Oh my gosh, this was...
What's it like?
Oh, it was... Well, when you're young, you don't know any better, right?
You were just like, whatever.
I thought, listen, I'm like, okay, you're 18-year-old, like, wow, this is how corporate world is. This is like
you thought everyone had a helicopter?
Oh, I thought everyone would get picked up in a helicopter in their parking lot, right? Or sometimes I would go to Manhattan and they have a helipad there.
Well, of course, a helipad, everybody, right? We all have one. You've got one too, right? Yeah.
Yeah, so now fast forward, this was 26 years ago. Here I am, still in the insurance industry. I found my calling. I spent the last 25 years really in underwriting, so I've honed in on that, and underwriters know a lot of information with health, financials, lifestyle.
So they're looking at all of the items on the application. I'm assuming there's like an application and you're going to put, you always hear about on TV, like if you're a smoker and you're over this age, you're not going to be denied. So the person that would deny you is the underwriter, and they're looking at those different credentials.
Yes. Essentially, it's like you can view it. I teach senior college students, and oftentimes, and usually they're finance graduates or finance majors, I usually put it this way. You can think of underwriting as like dating, right? So if you're dating, for example, you have choices. And you also have a list of things, hopefully, that you like. Let's just say you have like 3 things on your list that is a must-have.
I love this analogy.
It's like, good looking, have a net worth of $1 million, or very kind. So let's just say you have those 3 things. So,
sign me up.
Yeah, right?
I like the sound of that guy.
Yeah, so like, let's say the underwriting is important because it dictates cost, right?
I see.
Your underwriting risk classification basically ties into a number. So this whole dating analogy, let's just pretend you're an underwriter, right? And we're going to say, okay, Tanya, you have Bachelor A and Bachelor B.
Okay.
And you have 3 things on your list that you like, right?
Okay.
So let's just say that's good looks, good net worth, and also kind-hearted, right?
Kind-hearted,
so
I
let's
like
just
it.
say
Okay.
those 3 things. And then Bachelor A checks 2 of those 3.
Okay, so I think it's like a 67%. Okay.
And then Bachelor number 2 or B checks 1 of those
33% bad.
right? So let's just say if you have someone who checked 2 of those 3, you're going to give him a chance to, let's say, have dinner with you, a higher chance of having dinner with you, right?
Sure. Yeah.
Yes.
Yeah.
So guess what? So you're let's say you finished dinner and you're like, okay, well, he checks 2 of the 3. It's payment time. I'm gonna split the check with him, right? It's gonna be 50-50 because I really like him. Let's just add this now. I'm saying like this right now.
Yeah.
And then let's say it's the other person. It's Bachelor number 2 or B. He's only one out of 3. So you're gonna say, I'm gonna have him pay 100%, right? So in our example,
I understand. Okay.
you're like, I'm giving because Bachelor A is what I call a preferred risk. I prefer that person because he's 2 out of 3. I'm giving him a discount. I'm actually, paying half of the bill over dinner. Whereas when I'm with Bachelor number 2 or B, he's gonna have to pay 100%.
Because it's a little bit more risky.
He's a lot more risky.
So I don't know a ton about insurance, but I know I like to say just enough about mortgages to be dangerous. And so this is a very similar process with mortgages. They have an underwriter that determines risk that can affect their interest rate.
Yes.
Right. So I think there's probably some parallels between both of them. I would assume that an underwriting process for both is evaluating risk and determining eligibility.
Correct.
And so do sometimes people get denied for insurance, or do they just get a higher rate?
Yes, both.
Both.
So,
okay.
Under insurance, life insurance in particular, is based off of your health, your age, and your lifestyle.
Okay.
And if you have health conditions that are, from a mortality standpoint, somewhat acceptable, you could end up paying more than an average person.
Interesting.
So, but if you are, like in our analogy, a preferred risk because you check all of the good boxes, then you actually get a discount on what an average person would be paying. On the other side of the spectrum is that if you have medical impairments such as Alzheimer's, you're a little too old, you waited too long. That's just tough to do that. You have AIDS, right? You've been back in the 80s, 90s. That's a death sentence. Not anymore.
Sure, not anymore. Yeah,
not anymore. We can get you insurance, but you're probably, I'm sure you're going to pay a lot
higher
more,
premium.
Yes, than someone who doesn't have that. So the answer is both.
Interesting. So life insurance, and then you also do long-term disability care, long-term care. So
yes.
Can you explain to everybody what that is and who would need that? I know everybody does because I know it very well because my dad's a stroke survivor and he had long-term care insurance. And if he didn't have it, it would have been, it was already tragic, but financially it would have been significantly more tragic because he was 54. He was really young when this happened. So it would have been really bad if he didn't have long-term care insurance. So tell everybody what that is and who should be looking into it.
So long-term care actually is just, it's not like your health insurance, right? It's very different. Long-term care, they're services to help you have a normal life, like walking, eating, bathing, that kind of stuff.
Right.
They're services. So in your example, if someone who is 54-year-old and lost their ability to walk and eat because they developed a chronic illness, a long-term care insurance would pay for long-term care services.
Sure.
So they're 2 different things. Generally, when people our age hear of long-term care, we're like, oh, that's for grandma or mom and dad, right?
Old people.
It's for old people. It's actually one of the most common misconceptions that long-term care, generally, yes, it's the older you get, the chances of someone having a long-term care if you're age 65, I always say it's 50-50, right? People
Wow.
Google all the time, but they say it's 65%. But generally, as you age, there's what we call cognitive impairment, right? If you are
Sure.
cognitively impaired, then you would need long-term care services. That's usually your
lots of
nursing
things.
home,
Right.
or a home health aide that would come to your house. So long-term care insurance pays for those. So that,
Which, if you don't know, are so incredibly expensive. I mean, a home health aide or a nurse that has to come in a couple of times a week, depending on what type of care you need. I mean, it's a lot of money. So it's definitely, as we are all aging,
yes,
definitely something to learn about and understand and to see if you have it. I'm a 1099 employee. I don't have a lot of these things available to me through my employer. But if you're a W-2 employee, perhaps reach out to your employer to see if it's available. Probably worth it. And if not, reach out to Peachie to learn about it. So we've got health insurance. Goodness gracious. We've got life insurance. We've got long-term care. And then you mentioned annuities.
Yes, annuity and disability insurance.
Disability. Disability is separate from long-term.
Yes.
Oh, I thought it was the same.
No, actually.
Look at that, learning.
Yeah. So disability insurance is during your working years. Disability insurance insures your income. So let's say you're making $10,000 a month.
Okay.
So it will ensure that if you get disabled, not necessarily not needing long-term care services, which is a little different. Let's say you lost your ability to be a realtor because you lost a sight.
Right.
You can't see the house. You can't explain what
can't
it is.
drive anyway.
You can't drive anywhere.
In trouble.
Right. So disability insurance would kick in and pay you so that you can pay your bills. Okay, that's for you.
Interesting.
Yeah, that's income protection.
Really, really needed. Like super needed for sure.
Super needed. So whereas long-term care is going to pay the people providing service to you so you can have a good life.
So you have a quality of life, so they can maintain a quality of life, versus the disability insurance keeps you employed. I mean, keeps you making money, which, bills don't stop just because you can't work.
Exactly. Yeah. Pay for your house, pay for your food, it replaces your income. So it's very different. Okay.
Wow. Definitely it's important to work with someone who knows what they're talking about, who has a lot of experience, you've probably helped people from all different walks of life. You've probably helped people that are 25 to 85.
Yeah.
Single people, married people, divorced people, and everything in between. People making a ton of money and people just starting out. So
this will be my 26th year in the business.
Congratulations.
And thank you. I'm so excited because I still love what I do since, the day I rode that helicopter, I'm still here. And to your point, yes, probably around this time of the year, which is around holidays, I work a lot with people, ultra high net worth people with a lot of estate tax issues. And that's more of a higher complex planning. I work with estate planning attorneys and CPAs mostly. And also for the long-term care piece, generally I'd work with CPAs because we have ways to actually help with leveraging long-term care to turn taxable money into tax-free money. So there's not a lot of time to explain on this, but generally we work with a CPA to help a client. Say you have a lot of 401k money laying around and you can have RMD issues at some point. You're obviously going to work with your accountant. And your accountant, if they work with someone like me, we should be able to put our heads together and help you make sure that you are getting the most of your hard-earned money.
So, what I think is so amazing is that you're leveraging your knowledge with people that are knowledgeable in another area, right? So, because our businesses go hand in hand, right? Like I'm not an accountant either, and I'm not a mortgage broker. I know enough about it to guide someone to say, hey, listen, I'm now out of my wheelhouse, but I have these options for you. And it sounds like you are such a professional and you're so well known and respected in your community that you have accountants and financial advisors that are like, hey, I have a way to help you and you need to reach out to Peachie, which is amazing. It means you're very good at what you do and you're super trusted. That's remarkable, because that's what it's all about, is referrals and keeping it going and just providing value to clients.
It's really about relationships. And
yes, the relationship, it's what's so important.
Oh, yeah, definitely. I work with people directly. People come to me directly, but my niche, to your point, is really financial advisors and CPAs referring their clients to me. And that trust is huge.
Trust, yeah, for sure.
That trust that they give me to take care of their clients. So that's really what I find, why I founded my company, is to help with that.
Yeah, I just love that. Stay tuned for part 2 of this Elevate with Us podcast.